before every video, I want to show you guys the last trade that I made. Here's the last trade that I made. If you want trades like these, make sure to hop in the Discord. This is what it looks like with full access. Let's get into the video. Hey guys, Moosey Crypto here. Hope everyone had a good 4th of July. I know I did. Hope you stayed safe, watched some fireworks, whatever you did. Hope it was great. But during this channel, so you already know what time it is, let's learn a little bit of technical analysis tools and what to use. And today we're going over one of my favorites to use, which is the Fibonacci retracement tool. Now, Fibonacci retracement tools can be used everywhere. I want you to know they can be used on 5 minutes, they can be used on 1 minute, 1 hour, 4 hours, all the way up to weeklies, right? They're used specifically to find when are we going to reverse or when are we going to find a good time to see some reactions, right? Well, first we have to know how to draw them. And the number one way to draw them is we'll come over to our left tool, our tool area, click this third one down and click Fibonacci retracement. And once we click Fibonacci retracement, what we'll do is we'll draw it from the bottom, if you're looking for buys, all the way to the very top of the push. And that's how you draw simply the Fibonacci's, right? Well, you could do it the other way around. So for example, this is not where I would draw it, but for example, I would go very top to the very bottom, and that's how I would draw Fibonacci's. Now, you can use Fibonacci's for looking for longs or shorts or buying or selling. Either one, you can use them in both ways. Well, how do we know what's the bottom, what's not? Well, if you know me, we ignore tweezer tops to this channel and tweezer bottoms. Reason is, well, usually when you get a tweezer top and tweezer bottom, they're considered fake outs, right? So the candles that form next to the tweezer bottom, next to the tweezer top, those are your true tops and bottoms that you can find. So if we come right here to the current price action, this would be our starting point, our zero line, and we would draw it all the way to the top of the push. Now, why are you drawing to the top of this tweezer? That's a tweezer, right? Well, if you're drawing them, you need to draw to the very top point, and you always connect wick to wick. Now, down here, when you're starting your 100 line, that needs to be your true bottom, or other way around, if you're on the top, it needs to be your true top. Now, you also need to draw it to the very bottom of that push, or very top of that push, so you can include tweezer wicks, for example, at this point. So this is the current price action. This is on a 4-hour chart, and this is how you would draw them correctly, right? Now, you can see that there's a couple levels that I've highlighted, and these are levels that I want you to focus on the most. Now, for Fibonacci's, let's go over the settings that I like to have, and a lot of traders like to use as well, but these are the most important levels that you can find. So if we go to our Fibonacci tool, just click on it and go to the gear, go to the settings. When you're in the settings, this is what you will see, right? Now, yours might look a little different if you're first time using this, but these are the levels that I want you to have drawn in your chart. I want you to have the 0 line. I want you to have the 0.382 line, the 0.618 line, and this is important. I want you to make that one gold or a color that stands out to you. Next, you're going to have the 1. After that, I want you to click on one of the boxes that's already there, and I want you to edit the number to 0.65 and make that the same color as you made your 0.618 so it stands out. It looks like a little box when it's drawn in your chart. The other two levels, which are my most important levels that I like to look at, are the 0.5 and the 0.786, which is my absolute favorite level. Now, I also took away my background because I don't like the background. So if you want that, if you have other stuff drawn in your chart, it just makes it messy. So if you don't want that, make sure you just turn it off. Otherwise, keep it there. For reverse, don't click reverse. It's going to screw you guys up. Ignore the reverse, so keep that unchecked. Make sure it's unchecked. And that's the only settings you'll need for this, right? Well, now let's discuss why I chose those levels and what each one of those levels will do and how they react off each one of them. So let's go over what each level means and why the importance of these levels is going to tell you a lot of what's going on, right? So for example, if we drew our Fibonacci, just a basic Fibonacci, top to bottom, we'll have our 100 at the bottom and our 0 at the top. Just simply, those are your tops and bottoms of Fibonacci's. The important stuff is all in between. This 3.8.2, the first level we're going to talk about. Typically, what you will see is that level of your 3.8.2 is for parabolic moves up and down, and I will show you examples, but parabolic moves up and down is typically where the 3.8.2 comes into play. Otherwise, it's not my favorite line, but it is a point of respect and where you can look to buy and where you can look to sell after parabolic moves. The next level, we have it labeled here, which is the retail level / pattern creation level. That is your 0.5 level. It is green for me because it is an important level for me to look at. If you want to find where patterns start to form or where it's going to retrace to before forming a pattern, that's typically where your 0.5 comes in. It's also the level where, you know, it's been around the game for a long time. Yes, Fibonacci is a bunch of math sequences that can tell you, well, this is a certain distance that you'll get if you go top to bottom, and this is where it's going to land. If you want to look up the math behind Fibonacci, be my guest, just Google it. But overall, I want to show you what each level stands for in trading and how they're used while you trade. The next level is a golden pocket. Typically, I put usually here, typically this is an area where you will see a lot of buys, and you'll see a lot of buys stacked, where it hits here and it'll kind of hit a halt, and you'll see some consolidation happen, or you'll see some push up to kind of try to break the top or bottom wherever it hit, right? The golden pocket's typically a go past your 0.5, let's continue on this trend, you hit your golden pocket, now let's continue. My favorite level, the 78.6, I call this the whale level, right? And again, there's a bunch of examples I will show you, but the whale level is my favorite level, especially using leverage. If you're not using leverage, don't worry about it. I typically use leverage because this right here is a dead cat bounce area, as you could say. But again, guys, leverage is super dangerous. So if you don't use leverage, I don't recommend it, especially if you're beginners. It's very dangerous. You can lose your money. So if you're going to use leverage, be very careful and look at the risk. Make sure you look at what you can afford to lose and what you can't. I do leverage because that's just how I trade, and I've been around the game for a while. Again, if you guys are comfortable with using it, this 78.6 is a very good level to look for buys or shorts, wherever you're in. But these are the levels. This is the picture of how I want you to think about your Fibonacci, and I'll keep this up on the chart when I go and show you examples. So if we come to our current price action where we are, where we drew this first Fibonacci, let's look exactly how each one of these levels work. So with our picture to our left, so we can see what's going on, let's go and hit replay and watch how they hit each level. So come back to the top before you start seeing your actual push down. That's where you know the top is after your first trend push. So if we let it play a little bit, let's watch how it reacts with 38.2. Now, is this kind of a parabolic trend, this push up here, this big push? No, it's not parabolic, right? You can tell it's not parabolic. You have some sells and buys, sells and buys. It's not parabolic, but those sells and buys aren't the top. This is your true top. So I can look at my 38.2 and say, hey, most likely this is not going to work out. I can kind of ignore this level at this time. Well, I need to next pay attention to my 0.5 if I'm ignoring 38.2. So if we do that, let's watch what happens, right? We haven't touched it yet. You finally touched your 0.5. Now I'm going to start saying, hey, let's look for a pattern that's going to be created. This is also a good way to trade it is if you're buying at your 0.5 to look for a pattern. Well, typically you can take it back up to the top just to be sure. And you could put your stop loss right below it a little bit, give it a little bit of room just in case you get a little wick through. But if it comes to your golden pocket, your trade's wrong. You shouldn't have taken that 0.5. Well, if you want to trade it just like this, I'm going to make it safe. I go to the bodies. I don't go to the wicks because you're trying to be safe in your trades and secure profits, not watch you have profits and watch them diminish because you didn't hit your TP. So if we let this play, let's see if this 0.5 was a good trade. And that was a good trade. You can see we did make that trade. That was a successful trade. Well, now that that 0.5 was used, what we can do is find a pattern that's going to form. And that's a whole nother video. But I would assume, well, if nothing closes above here, nothing closes above that top line, then I'm okay, I'm safe, then that golden pocket and the 78.6 are still in play. So if we watch how it plays out, well, nothing closed above. You can see it tried, it wicked, nothing closed above here. If we zoom in there, nothing closed above, so come back down. Now I'm waiting for my golden pocket and my 78.6. Well, for me, trading on this right now is, well, I see it hit the 0.5, let's try to form another pattern. If it comes back down, typically you're going to watch it break through and go to the next level, right? Now we can watch, hit my golden pocket, got some reaction, but it's breaking through. As soon as it's breaking through, this is when you come to your whale level at 78.6, and I'll show you more examples, but watch how they react to 78.6. It's typically your dead cat bounce area, right? The whale level. So we touch our 78.6, there's your dead cat bounce, come back down, form your true bottom, launch. You're at your 78.6, there's your parabolic, right? That's your dead cat bounce. Well, look at that trade you could have made off your 78.6. So if you come back down, that's how it works. Those are all the levels. Now it's trying to respect it on the bottom side since it closed below. That's how they typically work, right? This is how you use each one of these levels, for example, on a 4-hour time frame. So if we jump over to a 15-minute time frame, so here we're on our 15-minute time frame. Now what we can do is, this is a pretty parabolic drop, as we can see, right? So if I want to do a Fibonacci on my parabolic drop, Let's draw it from top before that push, go down to the very bottom. Well, that's the top of that push, go down to the very bottom. How can we react off these levels? So if we let it play, let's watch how this works. If it's a parabolic drop, what do I assume? Well, I automatically assume that it's going to come back up to around its 38.2 since it's parabolic, and that's going to continue, right? Well, let's see what happens. Now you can see now it's going to try to continue its play. Now we're on a continuation pattern of that parabolic. And that's how I use that 38.2. That's 38.2 in action. Did it get to the 0.5? No, right? So you're fine. Well, if you're trading, especially on the 38.2, give yourself a little leeway with your stop losses because 38.2s are not a strong level, but parabolicism, that's how you use them in parabolic trades. That's the best way you can consider it. For another example, here's a parabolic drop, right? It's no stopping. It was a parabolic drop. Now, the best way we can do this, right? So if we come back in time, well, I see where my parabolic drop is finally stopping. So if I click it forward, all right, my parabolic drop finally stopped. Now what I want to do is draw it from the top to the bottom because I'm looking for shorts and sells. Let's see the level that it reacts. Now, if it's parabolic, I would assume it would go to the 38.2 level. So let's watch what happens. You hit your 38.2. Let's let it play. Now you're going to continuation on your patterns, right? That's just how it works. You can see how it goes. That was your single trade right there. 3.82. Put it back down here. That's your take profit. You get around 1.33%. So if we zoom out, we want to draw our Fibonacci. We'll come out all the way down to where we dropped, which was our COVID drop actually on March 9th to March 16th of 2020. You'll draw that bottom wick to the top. Now, this right here is panic sells. So if we draw this from bodies, it might look a little fresher for us, and you'll see how it works out because you have to recommend or you have to keep in count of all the panic sells that happened during that drop. Well, let's do bodies because this is actually your true bottom. You can see that it's actually falling on your support. That's your true bottom. Now you go all the way to the top of your first push. That's your whole Fibonacci sequence. That right there is how you're going to play this levels, right? We can see trying to hold your 0.5. We never touched our golden pocket yet. And I'm actually going to go down to the daily to show you what the candles look like. Your 0.5 tried to hold, right? You never touched your golden pocket, so it's still in play. Hasn't been used yet. But you use your 0.5 to form a pattern. Now that pattern that we formed, if we just drew this very quickly, would be something like this. And this is the pattern that you were in. And when you finally broke that 0.5, what you can see is what it did was create your pattern, right? That's what the 0.5 is. And again, the chart is up here. You can see what these levels mean. You can now see this in action of what it looks like. Well, the next time we came back down, we actually touched our golden pocket. That's our area of buys. You can see how long, once we hit our golden pocket, that consolidation period, we went into consolidation the moment we touched for around 32 days. So a whole month of consolidation sitting on your golden pocket before breaking it. Now, once you hit that golden pocket, you could have made a lot of trades off of it, right? As we can see. But is that going to tell you reverse? Especially after breaking a pattern that our 0.5 created? Not necessarily, but you still can make trades off of it. Now we go to my favorite level, 78.6. This is our whale level. Get that in your head. This is typically where dead cat bounces happen, even on daily and weekly charts. So the moment we got here, just like I called the bottom, I wouldn't say the bottom because I do think we're going to continue to drop. And again, if you haven't seen it, videos are going to pop up on the screen. Go ahead and watch those technical analysis to where I think we're going to drop. This is what I see. This is what I still see and what's happening. But if we can still make trades off of 78.6, especially dead cat bounces that typically happen on that level, and the whale level, they like to drop into the golden pocket, fake people out, buy it at this level, and watch them make money going up because they're faking other people out. Well, we can see the moment that this touched our 78.6, we would have made a trade around 21%. Now, that's pretty good, especially if you're just spot trading on Bitcoin. It takes a bit to move Bitcoin that much, right? So that's how the whale level looks in action. Go to our 4 hour, you can really see how it happens. Now, once that hit, that was our next push. Now we're all the way back to the beginning where we are now. We can go back to what we just did, draw our Fibonacci's, and watch how they're playing out. Same thing here. When we came to our 78.6, parabolic, that's where you look for your dead cat bounces and great trades, especially if you're using leverage. Again, don't recommend it, but if you are, it's a very good level to keep in touch. So if you guys have any questions, man, make sure you hop in. Again, this is a trade I made, so if you guys want trades like this, make sure you hop in the Discord. I'm more than welcome to help you guys out. Hit the like, hit the subscribe button, everything. Welcome to the family, guys. Appreciate you. Moosey Crypto out.